Here we have the 30-minute price chart for GameStop Corporation, stock ticker GME. So for the most part, if we're going to summarize what occurred last week, we would have to call this a positive set of trading sessions. Early on, we were looking for a bit of a bounce here out of this 2230 area. We were expecting to see a bit of a bounce here, and as we can see, this bounce did continue to extend until we did ultimately see a break of this $25 mark. For the most part, if you've seen my other videos, you know that I tend to make fun of people that focus on these big round numbers, $20, $50, $100, $500. I consider these to be random numbers, that don't really have any connection to the stock or to the cryptocurrency, whatever it is. I don't tend to pay much attention to those types of numbers very often. But I do think that GameStop is a bit of an exception here. Due to the fact that the Roaring Kitty options strike prices were placed at certain levels, and we do have some fairly significant technical signals that are currently going to be found at the $25 mark. So here I will be pointing to a few of those. I don't want to sound like I'm putting a lot of importance onto levels like this, because I generally don't do that. I think they're just random numbers that distract people from the real price action. But in this case, there are several technical signals that are really falling right at this $25 mark, and I think that they're important to point out here. So for the most part, we have to first look at these prior lows that were posted. On July 1st, we did see lows of 2232. This occurred after a fairly significant price gap to the downside. And overall trading activity last week was influenced by holiday thinned trading conditions. So there was the July 4th holiday on Thursday. And then when that occurs, you often see people pulling their orders out of the market, probably for Thursday and Friday. And then this does create an environment where there's potential for greater volatility because there are just fewer orders out there in the market. It's a holiday thinned liquidity condition would be kind of the technical term. But it really just means that there are fewer orders in the market and it's much easier to push around share prices. So ultimately, this caused a fairly significant price gap on the shorter term timeframes. And we did bounce right over some important support levels that were not triggered during this process. So from here, we were calling for an upside price movement here because this gap did need to be filled, and there were a lot of buy orders here that simply were not tripped. So it was kind of inevitable to see this move higher. This did ultimately play out, and that is a positive sign because we could have just as easily, continued heading lower in this type of environment because as I said, it's easier to push around prices. And if short sellers entered into the market in this area, it would have been much easier to lose that $20 support level. So the fact that they were not able to do this is significant. They were not able to heavily influence prices, and this does suggest ultimately that the bulls are still in control of this stock. It might not feel like that because we're currently trading, kind of mostly sideways here. This might seem kind of uneventful and maybe even boring, but the reality here is that the short sellers had a very clear opportunity here to send prices below the $20 mark, and they didn't get anywhere near there. The closest they got to it would have been this 2230 price low, which means that that $20 level is still intact. They have not been able to even approach those levels, even when market conditions would have made it easier to do that. So overall, that is a positive that does need to be noted here, and it does suggest that the potential for upside does remain real here. Okay, so in addition to that, let's talk about this $25 level. Normally, I wouldn't be focusing on something like this. I think it's stupid to be focusing on these random numbers, but in this case, I don't think it's a random number. So to start, we have this rising indicator condition on the 30-minute chart, which does show that there's positive momentum that's building in the market. You do need to see this because it has to. When you see an uptrend rally like this, you need these share price moves to be confirmed by the indicator reading, and fortunately, this is occurring here. You are seeing a rising indicator condition here. So this does mean that this is a valid move. It's not simply fueled by the price gap alone or by the holiday thin trading conditions alone. There is real underlying momentum here, which does suggest that a turnaround is unfolding even after we spiked to these 2230 lows. So if we're looking at this $25 level, it's important for a few different reasons. Not only not only the fact that it's a major psychological level and everybody's going to be thinking about this. 25 and 20 are probably the main kind of near term lines in the sand here. But we do have the 200 period exponential moving average that's falling in line right in this area. That would be this blue line here. Okay, so that's the 200 period exponential moving average. And it's really the only, the only moving average that hasn't been convincingly broken. I would say that we have broken it. I mean, as you can see here, we did get a spike above this level. It was a minor spike though, and you would prefer to see a price close, a closing bar. So that would mean that the body of this candle would have. You'd really like to see it outside of this moving average, and that didn't occur here. But it's still encouraging because it shows that these highs posted at 2507 here. And what this does mean is that the market did manage to push through whatever sell orders were in place near that $25 level. And I guarantee you there were some. People are so fixated on these price levels that I can feel 100% confident in saying that one, some people were probably exiting short-term long positions near that level. And two, some people had sell orders that were placed at that level trying to push prices lower to at least a test of the 20 mark, if not below there. So what this does mean here is that, it wasn't a huge price movement here, but what this does show is that all of these sell orders were filled. And then after that, we did see prices move higher. So overall, it's still encouraging because those people could sell again. They could enter into another short position. But funds are always limited to some extent. You can only do that so many times, and some of these orders have already been filled. So there was a clear break above the $25 mark. In addition to the fact that we've got this 200 period exponential moving average, we also have the 61.8% Fibonacci retracement of this prior trending move to the downside falling in right at $25. It comes in at 2501. So it's not exactly 25, but it's close enough where this is significant, and it does kind of point to some added validity with respect to this kind of psychological round number at $25. We have already seen a break above here. So what I'm essentially saying is that these initial sell orders have been filled, and we have not seen massive declines here. So the effect of any sell orders here has been extremely limited. We're talking about less than $1 to the downside. In share price action. So overall, it's not the major bounce that everybody's hoping for. But overall, what I'm saying here is that the momentum conditions do remain favorable and relatively strong for GameStop Corporation, stock ticker GME.